There's a consortium of banks that's looking at launching like top 7 currencies as stablecoins on a blockchain. There's a tremendous amount of innovation that's going on in tokenized deposit. And can tokenized deposits become an interbank settlement mechanism?
Being in the crypto industry and building from the stablecoin standpoint, I think you have a head start. So hopefully your product wins here and, with the collaboration of the crypto industry.
That's what I'm betting on.
This episode is brought to you by Uphold, which is a great crypto platform that makes it easy to buy, sell, and stake crypto assets. Uphold has over 300 plus cryptocurrencies, including Bitcoin and all the top altcoins, and they offer a crypto staking on over 19 crypto assets. I've been a user of the platform for many years. They are safe and reliable. They don't commingle or lend out your crypto funds, and they are 100% reserved. You can review their transparency report. Uphold also offers an amazing rewards program where you can earn up to 5.25% on stablecoins. This rewards program also allows you to get 24-hour early access to new tokens that they list. And to participate, you just simply have to open the app once per month, deposit $50 once per month, and trade $50 once per month. And the stablecoins that they support includes Ripple's RLUSD. You can earn up to 5% on that stablecoin and 5.25% on USBC. So if you'd like to learn more about Uphold and all the great services they offer, visit the link in the description. Hey folks, welcome into the Thinking Crypto podcast. I'm your host, Tony Edward, and joining me is Kevin Lehtiniitty, who is the CEO of Borderless XYZ. Kevin, great to have you back on.
Hey, thanks, Tony. It's great to be on the show. It's always great to see you.
Kevin, some big announcements coming out from Borderless. And in addition, I want to get your take on what's happening with the stablecoin market. There's been some big updates around BlackRock and much more. But let's kick it off with the big news around Borderless Benchmark. Tell us about this launch.
We are super excited about this. The more that we've been spending time with non-crypto native companies, so the traditional PSPs, larger corporates, the fintechs, et cetera, and we've been spreading the good word of the gospel of stablecoins, right? Better, faster, cheaper, et cetera. One thing that has become really clear is that there isn't a great benchmark for the FX rates in stablecoins. If I think about traditional FX, I can go to Bloomberg. If I think about crypto, I can go to CoinMarketCap. Right? There's all these different data sources about what is the price of an asset. But if I think about the rates in the stablecoin world, that doesn't exist. And the larger and larger fintechs we've been talking to, they ask an incredibly good question, which is, are stablecoins actually cheaper than traditional fiat rails?
Right.
And there's a lot of people on the camp that say, raw stable coins, better, faster, cheaper all day long. I don't think that's quite true. If you look at markets like USD Europe, SWIFT settles T0. It's the most traded FX pair in the world. The spreads are incredibly tight, et cetera, et cetera. But if you look at like South Africa to Brazil, for sure, stable coins are a giant cost savings there. Right? But the question is like, how do we actually answer that fundamental question? And you can go to an exchange, right? You could look on Binance or you can look somewhere else. You can go to an orchestrator. You can go to a Bitso, a Yellow Card, a Trace Finance, an Avenia, a Honeycoin, someone like that. But you only get to see their rates. And what we feel like the industry is missing is this credibly neutral benchmark that is able to aggregate across all these different pockets of liquidity and say, okay, this is the mean, this is the median, this is the standard deviation, this is the min and max, this is the buy side, this is the sell side, etc. And what we realized is that we have a very interesting connectivity because our core product is connecting PSPs, orchestrators, etc., into a whole network of global counterparties for on and off ramps, that we're actually seeing all these different transactions and all these transactions being, we're saying all this different FX rates data in near real time across 70 different countries from dozens of different providers. And we've said, wait a minute, maybe we should make this data available to everybody. And that's the genesis of the Borderless benchmark. So already live at borderless.xyz/benchmark, you can go, and this is super early. I will caveat with that. We're big in, build in public. I will tell you it's our beta version. Alex will tell you it's V0.000000001. It's not pulling from all the data in the network yet. It's pulling from maybe 10% of the data. And over the next few months, we're going to make it 20%, 30%, 40%, 50%, 60%, et cetera, et cetera. We really want to encourage as many people who want to be part of the benchmark to contribute their data and their rates, and we've got a process for that on the website where people can participate. But that's the fundamental question, right? Is what is the FX rate? What is USDC to BRL? What is USDT to KES? That's not answerable. Now, finally, with the Borderless benchmark, people have a place where they can go. The basic version of this is completely free. It's on the website. Anyone can go, click on it, see the data, see the spread, start to get an understanding of what's going on. And then for Borderless customers, we're going to build a lot more of this data into the intelligence layer of the platform and be able to understand, what is the USDC price versus the USDT price? And what corridors do I have an advantage for using this stable over that stable? Are there differences in rates because of liquidity between different chains? All those sorts of things. What about business payments versus consumer payments? What about first party versus third party, right? Not every provider does third party payments. So if I need third party payments, how does that change the depth of liquidity and therefore the FX price? Answers to all these questions is what we're trying to solve for. And we've got a few early folks that have taken a look at it from some of the largest payments companies in the world that have said this is incredible and we need to show this to like 3 teams internally right away. So we're pretty jazzed. But this to us is that incredibly neutral, community-driven effort to say not stablecoin provider 1 versus 2, like let's go battle over FX rates, but stablecoin industry as we try to bring on flows from TradFi and PSPs and corporates and banks. We've got to be able to give them these basic building blocks that they're used to getting from traditional payment rails. And this is our first step at trying to kind of coalesce a community center of mass by providing all this data in one place.
Kevin, that's really profound. I kid you not, last week I was talking to someone about this, the FX markets and how stablecoins can make it better with the instant settlement and the real-time transactions on the blockchain. But to your point, this facet of the infrastructure is missing. And I feel having this data out there will help boost adoption of stablecoins because people need to know all of these things you mentioned. But there's no central place to get it, but you have this solution now.
We've started it, right? I would hardly say it's the solution. We are, about 10% of the Borderless network data is now being incorporated. That will grow. But we've started a place to have this. And our ask to the rest of our industry is come help us, right? This isn't a borderless thing. This is a stablecoin industry-wide thing, right? And we're the connector here that is already in so many of these different conversations that we're able to be a distribution channel for all this information. So please, come contribute to the benchmark. Let us help you distribute all that out, into the PSPs, corporates, and orchestrator world. And let's create a very, very real stablecoin FX benchmark that can answer these sorts of questions for the Fortune 50s, for the largest banks, for the largest payments companies on planet Earth, and get them to adopt stablecoins. Because if that happens, the tide that will rise from that is going to make everybody who's contributing to this industry so much more valuable.
I love that you're open to collaboration and working with the rest of the industry to get more data as well and make it, you just have more points of views and plugins of information and that it's free. That's awesome. It's free and open access. And then dumb question, do you have to talk to the likes of a Circle or a Tether or not necessarily? You just need to work with the payment companies and the banks and so forth.
We're more focused on the payment companies and the banks and so forth. Obviously we would love community support from the likes of Circle and Tether and others. I'm sure they have a lot of very interesting data that can be contributed to the benchmark that would help us all make something a much, much stronger product and therefore bring a lot more folks into our industry. But ultimately we're starting with kind of the banks and payments companies and those folks. And I'm a big believer that open networks always win. That's what we're trying to do. We're trying to not necessarily create and own something for our benefit. We're trying to be the community organizers of something for everyone's benefit.
Kevin, this reminds me, and you could correct me if I'm wrong here, but it reminds me of some of the indexes and the products and aggregate data that Bloomberg and the S&P Global and these folks have created for TradFi assets. Is it kind of akin to that?
I 100% agree. When we think about what is an FX rate, kind of Bloomberg mid-market spot rates come to mind as an index and a benchmark of what FX rate data should be. And maybe, one day they internalize this and they own the FX rates benchmark and we will have failed as an open network. But I think that this information is so powerful in growing the stablecoin industry that it can't be internalized by a gatekeeper. It's got to be coalesced as a community effort with data from all sorts of different people and then made available to the world. And that's kind of why we're taking this open network approach. And maybe we'll be proved wrong. Maybe someone like a Bloomberg will come in and put it behind a $200,000 a year subscription and, try to own the data versus making it available to the community. But we'd like to think that the crypto ethos of builders and of decentralization is strong enough that if we're going to have a stablecoin related benchmark, it should be a credibly neutral open standard versus one corporate company's walled garden.
Oh, absolutely. And I do think you have a head start, obviously being in the crypto industry and building from the stablecoin standpoint. And I don't know if these folks I think they're still trying to find their way in the market, but I think you have a head start. So hopefully your product wins here and, with the collaboration of the crypto industry.
I don't think Borderless beats Bloomberg by any way, shape, or form, but I think the stablecoin community can beat Bloomberg. Yeah. And that's what I'm betting on.
Absolutely. With regards to innovations that are happening in the stablecoin space, there's folks creating stablecoins for the euro and other currencies. And this, you may have already addressed this indirectly, but will this product be able to capture that as well? So let's say eventually there's a digital, I don't know, yen or something, whatever, and people are, going between a US dollar backed stablecoin and a digital yen. Will this platform be able to track all that?
Exactly. So right now we're starting with USDC and USDT, and we're tracking both of those tokens against a bunch of primarily emerging market fiat currencies, right? USDC against USD is not necessarily super interesting, right? But USDC and USDT against like BRL, MXN, KES, ZAR, Argentinian pesos, like those are the very interesting things, in addition with like APAC currencies as well that are coming. And then we want to start to add more stablecoins, right? We want to start to look at like, okay, USDG and AUSD. And as we're in this expansionary environment post Genius Act, what does that look like for the corporate white label tokens as well, right? If there's an Amazon USD, what does that look like compared to USDC, compared to USDT? That's really the core of credible neutrality. And then we want to get into the Euro stablecoin pairs. We want to get into the other stablecoin pairs. Like, my goal, if I could wish for anything, 5 years from now, is to have this open, credibly neutral layer that's able to ingest data from all of these different fragmented market participants and give the treasury team at, the world's largest companies one single source where they can go and they can do real live rate comparisons across their entire treasury program, find cost optimizations, and make very compelling arguments back to the CFO that says, hey, this is, the Bloomberg fiat mid-market rate superimposed on top of the stablecoin market data. And when we're managing our US Euro treasuries, we should keep doing that the way we've been doing it. But when we want to go and deploy capital to markets A, B, and C, we're actually going to achieve 12 basis point average cost savings, which at our scale saves us millions of dollars. And now that's the argument to go and use stablecoins versus, oh, they're trendy. I see our competitors do it. Like actually giving that power to those treasury teams to go take the business argument, quantify it, and take it to the CFO, where he looks at it or she looks at it and says, oh, wow, this is a no-brainer. We're about to save $3-4 million a year. Go do it.
Are you able to tell us some of the names of the folks that you're going to be pulling this data from? I know some of this stuff might be under NDA and you probably can't, but I have to ask.
Let me answer your question indirectly. So the data that we're showing is all anonymized for a lot of reasons, NDAs, other things of that nature. But we do make the Borderless network members public on our website, borderless.xyz/ecosystem. And you can see all the different on and off providers that we're connected to. You can see this like global map of the rails coverage and currency coverages and things like that. So while I can't directly answer your question, if you go and you look at who is on Borderless's network feeds the benchmark, and you can get some indirect sense of where this is coming from.
Got it. Yeah, that makes sense. So folks, go check out Borderless's partners on the website.
That'll give you some sense of it.
Oh, for sure.
Not every partner is there. It's about 10%, like I said. It will grow more and more, and we will add more partners as well. So not only will more partners be included, but also we'll have net new partners that are joining. So this is, there's an old saying in kind of startup world, which is if you're not embarrassed by your product launch, you didn't launch it early enough.
Uh,
Um, I think I am decently embarrassed by how kind of like raw and basic this is. So I think it's the right time to put this out in the world and then ask people to help us make it better.
Absolutely. And how real time is the data? Is there any lag on that front?
We snapshot the rates across the network providers on an hourly basis.
Hmm.
And then we cache that and then we turn that into more of like a daily rate. So right now we have the last 30 days of data available. That's what we really wanted to launch with, was like a month of historical information at the very least. So you could start to see some trends.
Sure.
And it's interesting because you can see days where the buy sell spread widens, days it tightens. You can see volatility increase and decrease. Even with a month's worth of data, it's actually quite interesting at this point. And part of what's important to us is trying to figure out, I'm not going to show you 3,000 different data points at some point, hour by hour.
Hmm.
So for, maybe last 7 days and last 30 days, we'll show you hourly snapshots. And then for older history, we'll compress it to like a daily average or something like that, so that you're also not overwhelmed by the volume of data. And then part of what we're thinking about is, okay, if that's the approachable answer, which I think it is, then what does it look like for like analysts and, other folks who want to go deeper? How do we balance consumer friendly and approachable on one side with then maybe some sort of like an expert mode or analyst mode on the other side that lets you add a lot more reporting, that lets you pull out data more granularly? How do we give you API access to the benchmarks that you can really pull this into your in-house, data analytics suites? And there's a ton that we want to do with this that we think would really benefit the industry.
It's exciting, man. And I think certainly a core part of the infrastructure that's needed for stablecoin adoption. I love it. While I am not involved in FX at all, or, any of these things, I am really fascinated by it. It's like, I want to look at the data and see what's moving, what's happening, and even, align that with maybe geopolitical things that are happening and how that affects markets.
I think, we are not an analyst company. We are a technology infrastructure company. But I would love to see some market analysts and others kind of partner with us on this benchmark and start to be able to look at, wait a minute, this was the real-time impact on USDC something else FX rates when Trump announced the China tariffs, as an example, right? Like, what did that do to the dollar? And specifically, we have FX stuff around this, but what did it do to the stable coins that are dollar backed compared to all these other global currencies? And I think this could feed a ton of interesting insights and research and things of that nature. And I hope that there's some very talented researchers who end up using this and creating these insights, because I would love to see them.
Absolutely. Great stuff, man. And then, on the other side of the business, how are things going with talking to different folks about adopting stablecoins? Obviously, we're talking post Genius Act being signed into law. It takes time for certain things to be implemented, but how are folks feeling about stablecoins?
I think historically, the biggest challenge with stablecoins has been regulatory risk. And some of that certainly exists, right? Some of the conversations that we've had with people are great. The regulatory climate under this administration is very favorable. But what will the regulatory climate look like under the next administration? And if these people heavily adopt stablecoins and the next administration is unfavorable, does that put a target on their back 3-4 years from now that they're going to regret? So there is still a little bit of regulatory uncertainty, I would say, from people that we talk to. But by and large, this is the unlock that people have been waiting for, right? The banks that we're talking to are thinking about bank consortiums to issue stablecoins. The large corporates that we're talking to are thinking about how can they issue a stablecoin into their own existing user base, distribution base, B2B vendor supplier base, etc. A lot of the large fintechs are talking about how do they leverage stablecoins. Lightspark had a phenomenal partner summit last week. And as part of that, they had a bunch of, major fintech CEOs, including the CEO of SoFi, And he was talking about the stablecoin that SoFi wants to launch.
Wow.
Right. So we're going to see this giant explosion of more and more stablecoins. And that's all Genius Act based. Genius Act is that regulatory unlock, along with the new SEC policies, or kind of the new SEC leadership with kind of Gensler stepping out, and FDIC and Federal Reserve leadership saying, okay, the bank regulators are okay with stablecoins. Genius Act gives you a compliant issuance framework, and the SEC isn't going to randomly decide that everything on a blockchain is a security and come tag you with a Wells notice. And those three things combining are starting to enable people like SoFi to very credibly say, we're looking at a stablecoin and there's a ton of plans that we have for what we want to do with it. And that is really cool.
Yeah, it's exciting, man. Certainly, folks are more optimistic. They want to build, people want to innovate. And Kevin, just on Thursday, I think, just yesterday, BlackRock announced they're going to launch a Genius compliant money market fund tailored for stablecoin issuers. Love to get your thoughts on that and what they're trying to do there.
It's very clear that if you're trying to sell picks and shovels, there's two really big picks and shovels businesses for stablecoin issuance. Mm-hmm. It's the technology providers that are going to enable the issuance of the tokens themselves. So these are companies like Bastion, companies like Anchorage, companies like Braille, et cetera, different regulatory frameworks. Bridge does some of this stuff as well. Mm-hmm. Like, who is selling you the technology to issue the stablecoin? And then the other giant pick and shovel is going to be the asset management. And I think that's what BlackRock is saying, and saying, hey, wait a minute, we don't need to pick winners and losers. If we can have the best kind of asset management programs for stablecoin issuers, we can then go to what's going to be hundreds of different stablecoin issuers, which candidly, most will fail. That's what's going to happen in this market. But we can go to hundreds of these issuers and say, hey, here's how BlackRock has a product that's going to manage all those reserves for you in a way that's going to make it really easy for you to be Genius compliant. You're going to tack that on with your technology provider and kind of regulated issuer, again, whether it's a Bastion or an Anchorage or someone like that. And then that's going to let you take that white labeled stablecoin to market as, SoFi USD or Amazon USD or, Revolut USD, or PayPal already has PYUSD, and drive that into your user base.
It's just amazing what's happening, the innovation coming from crypto native companies as well as the Wall Street firms. But there has
America's been unleashed.
Yeah.
It's been the unlock, right? This industry has been, I would argue, illegally persecuted by the previous administration for years. Operation Choke Point 2.0, all these different things. And now what we're seeing is not even what happens when it's encouraged. What we're seeing is what happens when you unlock innovation in America. And the answer is America is really, really good at being at the forefront of innovating with global technology. We've seen that since the birth of Silicon Valley. America's been the innovation economy. And now the handcuffs are off. And are there going to be bad projects? Of course there will be. Are a lot of projects going to fail? Of course they will. But builders are now out there. They're trying. The playbook is fair. There's a sandbox that you can play in. And that's just unleashed innovation across the board.
Hey, but Kevin, not everyone is too happy about some of the stablecoin innovation. Some of the banks, the banking lobby, have been trying to push back on stablecoin yield in the, via the Genius Act. They're trying. I don't think they have been successful. But what are your thoughts on them pushing back?
I think there's a talk track that banks are really disintermediated by stablecoins. I don't think that's true. I think banks have a major role to play in stablecoin innovation. But when I see things like the banking lobby arguing against stablecoin yield being passed through and things of that nature, I see that as incredibly defensive. And I see that as coming from almost a point of fear where they're trying, banks have been a regulatory monopoly since this country was started, since banking legislation was really put into place many years ago, where banks have never had to compete in a free market economy. Right. Banks have only had to compete within other banks, within their, monopoly. They've only had to compete within those folks. And now they're competing with software companies. They're competing more globally. It's massively changed. And I think we see this happen all the time, where the incumbents, instead of embracing that competition and using that to drive better products, drive better pricing, drive better user experiences, drive better distribution, they react by trying to kneecap the better products. Right? Think of the taxi lobby versus Uber. Taxis could have been the biggest distributor of Uber, right? Think about how many Uber drivers were in new markets versus taxi drivers. Taxi drivers could have been the ultimate infrastructure that's filling the Uber rider demand.
Right.
But no, they said, we're going to fight Uber. The taxi lobby is going to make ride sharing illegal. They're going to block them at the airport. They're going to do all those different things. And ultimately, it didn't matter in the long term. Uber still became wildly popular because it was a much, much better product. I think the same thing's going to happen here. Banks are saying, hey, you can't do this, you can't do that. We want to stop you from doing this. That all disincentivizes or like hurts the ability to compete. Long term, it doesn't matter because stablecoins on a blockchain are such a better product. The ability to move value immediately around the world, the ability to track that value, the ability to have that on a decentralized ledger that we all agree on. All those things make such a far better product that, in my opinion, that energy would be much, much better served figuring out how banks can support and play a role in stablecoins. And to be fair, the banks are, right? There's a consortium of banks that's looking at launching like top 7 currencies as stablecoins on a blockchain. There's a tremendous amount of innovation that's going on in tokenized deposits, right? Not stablecoins, but tokenized deposits. And can tokenized deposits become an interbank settlement mechanism? I think the answer is yes. And there's a lot of places where that makes more sense for stablecoins for bank level settlement. Stablecoins make more sense for businesses and retail users. Right. Tokenized deposits make way more sense for financial institutions. That's where the efforts should be, not in blocking stablecoin rewards.
Absolutely. Well said. And, a part of me thinks also, could this be a delay tactic? Let's slow these crypto native guys down because we want to launch our own stablecoins. We don't want to lose the customers, right? We want the deposits, people keeping their money in checking and savings versus putting it on an exchange or some stablecoin platform earning higher yield and even staking.
Yep. I think the advantage the banks really have is around counterparty risk. And I think that's what they should lean into. If you're a large multinational, if you're one of the world's largest payments companies, right, and you're talking about really doing size, you're not talking about crypto size, you're not talking about fintech size, right? You're talking about actual, real, true institutional volumes. Circle is still a fintech startup that just IPO'd, right? And what is the counterparty risk of that? Tether has done a phenomenal job building incredibly deep liquidity around the world. They're a private company. I think you have a tremendous opportunity as a bank to say, do you want counterparty risk on Circle as an issuer? Or do you want counterparty risk on this consortium of BOVA, JPM, et cetera, as your stablecoin issuer? And if I were them, that's where I would go very, very hard into and say, stablecoins are amazing. Stablecoins should be able to do everything because that means our stablecoin can do all these different things. And what matters is who issues your stablecoin and who do you trust from a counterparty risk standpoint to issue that. Obviously, it should be us, this consortium of the major banks that you already trust from a banking perspective. And they're going to be the right folks to lobby around, things like FDIC insurance for stablecoin accounts, right? Like that's going to come from bank lobbying. So instead of fighting yield, go lobby for making the stablecoin products better, and then go make yourself the center of those stablecoin products. And that's the role that I think the banks have to play is actually as issuers, as counterparties that are already trusted for trillions of dollars of settlements and payments flow. Go do that. That's what you do best.
Yeah, no, that's well stated. And we'll see how it all balances out. You give the example of taxis and Uber, and this is like the age-old thing, right? Netflix and Blockbuster, and the automobile and the horse and buggy, and so on and so forth. Something that happened recently with PayPal, I don't know if you can speak to this, but
I know where you're going.
Yeah, the headlines, right? Where they minted 300 trillion in PYUSD, but my takeaway wasn't that, because I know humans are going to make errors, right? People are going to have fat fingers sometimes. But the point is, we all, as the public, saw it at the same time that it happened, right? Because it's on chain, man. And when they burned it, we can confirm they burned it. So you can't do that at a bank. There's no way I can see what's happening at JP Morgan, but on the blockchain, I can see it.
How many stories are there on Reddit and other places where someone says, I woke up in the morning and my bank account had an extra $100,000 in it, right? And no one ever knows. So human error is a thing. Should human error be minimized? Absolutely. You need operational controls, you need processes, you need all these different things, checks and balances within your organization and through the underlying technology in order to make sure that these things happen as infrequently as humanly possible. But the great part about blockchain-based systems is that trust but verify. Right? We all saw it. We all saw the mint. We all saw the burn. No one has to take Paxos's word for, oops, sorry, we fixed it. Go, this sucks. Like, let's be honest. Paxos is one of the world's best crypto companies.
Yeah.
And they made a giant error that they should not have made, but it happened. And the beauty of blockchain means that every one of us was able to independently verify that, in fact, it was fixed versus a bank saying, trust me, bro, it's all good.
Yeah. Yeah, absolutely. Yeah, and I love that transparency that this technology brings. And like you said, we can not just trust, but we can verify. We can look at the data, see it on chain, real time. Most of the times, if not, maybe a week later, the sleuths will figure it out on the blockchain, and that's the great thing, man. Kevin, awesome stuff. Love this product, the benchmark product. Folks, you can check it out. The link will be in the description. Go check it out. And Kevin, I'm looking forward to seeing the data pour in because, as a nerd, I'm going to look through it and take my own takeaways from it, even though I'm not in the FX markets at all.
Absolutely. Tony, thanks for having me on. Your questions are always insightful, and I always enjoy our time together. So thank you again.
Awesome, man.